Greetings, entrepreneurs. Today's topic is on VAT and its importance for small medium enterprises in South Africa.
The first step is understanding what is VAT. Value added tax or VAT is an indirect tax charged on the supply of goods and services by a vendor in the course of furtherance of an enterprise. When a business is registered as a VAT vendor, it charges VAT on goods or services it supplies, output VAT, and may claim back VAT paid on eligible business purchases, input VAT. Now that we understand what VAT is, let's look at the different VAT rates that apply in South Africa. Now, let's take a look at the different VAT rates that apply in South Africa. VAT is charged at either the standard rate of 15%, the zero rate of 0%, or may be exempt depending on the type of supply. Understanding that these different VAT rates exist helps businesses apply VAT correctly and remain compliant with SARS. Stay informed, stay compliant, hashtag know your VAT.
Who could register for VAT? A person can only register for VAT if they are carrying on an enterprise. According to the VAT Act, a person includes a public authority, municipality, company, body of persons, trust, the estate of a deceased or insolvent person, a natural person, and a partnership. Any person carrying on an enterprise that supplies taxable goods or services in South Africa may register for VAT, provided that they meet the requirements for compulsory or voluntary registration. But before we look at those registration requirements, we first need to understand what SARS means by an enterprise.
According to the VAT Act, an enterprise is a defined term. It includes any activities carried on continuously or regularly by any person in or partly in South Africa, where goods or services are supplied to another person for a consideration, whether or not for profit. Anything done to start or terminate an enterprise is also included as conducting an enterprise for VAT purposes. Now that we understand what an enterprise is, the next step is to determine whether your business meets the enterprise test for VAT registration or not. To qualify as an enterprise, SARS looks for a few key requirements and every one of them must be met. The activity must be carried on continuously, involve supplying goods or services, and you must receive or expect to receive payment. It must also be conducted regularly, take place in or partly in South Africa, and involve taxable supplies. If you can tick every box, your activity qualifies as an enterprise for VAT purposes. Then you can register once you exceed the registration threshold. Hashtag tick every box. Private sales, hobbies, and exempt activities do not qualify as enterprises. These activities are not regarded as taxable business activities.
Now that we've established what qualifies as an enterprise, let's look at when VAT registration becomes compulsory. If you're carrying on an enterprise in or partly in South Africa where goods or services are supplied for consideration, you may be required to register for VAT. Compulsory registration applies when your taxable supplies exceed or are likely to exceed 1 million rands in any consecutive 12-month period, or if a written contract shows you'll exceed that amount. Think of it as your business getting a message from SARS saying, "Congratulations, it's time to register." Once the threshold is exceeded, your application must be submitted within 21 business days. Miss the deadline and SARS won't be the only one keeping score. It's also important to note that effective from 1 April 2026, SARS increased the compulsory VAT registration threshold from 1 million rands to 2.3 million rands. But what if your business doesn't meet the compulsory registration threshold? The good news is that voluntary registration may still be an option. A person may voluntarily register for VAT if the value of the taxable supplies is less than 1 million rand, 2.3 million rand from 1 April 2026, but has exceeded 50,000 rand in the past 12 months under certain circumstances. SARS also considers factors such as your monthly taxable supplies, written contracts, business expenditure, and qualifying finance agreements when assessing a voluntary registration application. In short, you don't have to wait until your business is making millions before becoming VAT registered.
VAT compliance requires businesses to keep accurate records of all taxable supplies, submit VAT returns on time, apply the correct VAT treatment to standard rated, zero rated, and exempt supplies, and retain supporting documents for every transaction. By complying with these requirements, businesses avoid penalties, protect themselves during SARS audit, and remain on the right side of SARS. One of the biggest advantages of VAT registration is the ability to claim input tax on eligible business expenses. This allows businesses to recover the VAT paid on purchases such as inventory, utilities, rent, and professional services. As a result, operating costs are reduced, leaving more money available for day-to-day operations and improving cash flow. These savings can also be reinvested into the business, increasing profitability and supporting long-term growth.
We've covered the what, the who, and the why. Now it's time for how to actually register. To register for that, log into your SARS e-filing account and select SARS registered details. Then maintain SARS registered details. Next, confirm your details. Tax practitioners need approval from the taxpayer, while individuals can access VAT under revenue and my tax product. Then select Add New Product Registration, complete the application, and provide the required business information. You may also need to complete facial biometric verification. Finally, submit all required supporting documents. SARS will validate your application before issuing your VAT number. If more documents are requested, submit them within 21 days. And that concludes the registration process. Thank you.
From here on, we will be dealing with the VAT 201 form for declaring VAT. Now, you may be thinking, how is it possible to fill in a form with just a day's worth of explanation? But to jog your memory, one of my colleagues had already spoken about the different types of supplies, and that theory comes into play here. Remember, standard rated supplies are taxed at 15%, such as machinery and equipment. Zero rated supplies are taxed at 0%, but still allow input VAT claims, such as fuel. And exempt supplies have no VAT charged and no input VAT claim, such as residential accommodations. These three categories are exactly what determine how each figure gets entered on the VAT 201 form. In this slide, we look at how we apply the theory from previous slides in practice, specifically in completing the VAT 201 return form. This is the form we use to declare output tax and input tax and calculate the VAT payable or refundable. I've included two references for anyone who wants to delve deep into the topic, but for now, here's an overview. Section A covers output tax, the VAT you've charged in goods and services supplied to customers. It is split by the type of supply, as previously discussed. Section B covers input tax, the VAT charged to you, but here the claims are distinguished by the nature of supply, capital or revenue nature, rather than the type of supply. Adjustments include things like bad debts. If you sold on credit, charged VAT, but were never paid back, you can claim that VAT back. VAT payable is what you owe SARS, and VAT refundable is what SARS owes you. Correct classification of supplies is essential to avoid audits and penalties. You also need to know that this form will not look the same for everyone, and you will be required to generate a customized version on your e-filing profile. Thank you.
Thank you for listening. We hope this presentation has helped you better understand VAT and its importance.